Stop what you're doing, seriously, because what China just pulled off in the silver market is one of the biggest strategic moves I've seen in years, and almost nobody is talking about it. We're going to fix that right now. What you're about to hear isn't a conspiracy theory. It's not doom porn. It's a documented, data-backed, geopolitically terrifying story about why the world's second largest economy has been quietly, aggressively, and systematically hoarding one of the most critical metals on the planet. And when you understand what China knows, what they've known for years, you're going to look at the silver sitting in your portfolio very differently. Let's get into it. In 2024 alone, China's purchases of silver abroad, refined silver, silver in semi-manufactured forms, silver plated with gold or platinum, hit 3,700 metric tons. That's 3.7 thousand tons imported in a single calendar year, an 11% jump from the year before. And that number? That's just what the trade databases can see. When you add silver ores and concentrates, the raw feedstock China sucks in from Peru, Mexico, Bolivia, and Russia to feed its massive smelting complex, China imported 1.7 million tons of silver-bearing ore in 2024, worth over $5.5 billion. China accounted for 89% of all international sales of silver ores and concentrates globally. Let that sink in. 89%. One country. Dominant beyond anything you'd see in oil or even rare earths. So, when I give you the headline number of 790 tons of refined silver ingots and powder accumulated across key strategic windows of 2024 and into 2025, that's just the visible, traceable tip. The real story is the architecture behind the accumulation. The why. Because China doesn't buy things they don't need at scale. And they are buying silver at a scale that should make every Western policymaker lose sleep. Here's the thing that the mainstream financial media keeps getting wrong. They treat silver like it's jewelry, like it's a second-rate gold, like it's something your grandmother stashes under a mattress. China doesn't see it that way at all. China sees silver as the lifeblood of the 21st century industrial economy, and they're right. Silver's superior electrical and thermal conductivity properties are increasingly essential to the technological transformation driving the global economy. According to a December 2025 report from the Silver Institute, sectors such as solar energy, electric vehicles, and data centers, and artificial intelligence will drive industrial demand higher through 2030. Think about that list for a second. Solar, EVs, AI data centers, those aren't niche markets. Those are the three biggest structural growth stories of the next decade. And silver is the thread running through all of them. The solar industry now accounts for 19% of all worldwide silver metal demand, with over 85% of silver paste demand coming from the solar sector alone. China led 51% of the growth in installed photovoltaic capacity over the last decade. Solar capacity is forecast to grow at a 17% compound annual growth rate to 2030. Now here's where it gets uncomfortable for the West. China's share in manufacturing across the solar panel supply chain now exceeds 80%. China doesn't just buy solar panels, China makes them for the world. And every single panel requires silver paste. Silver paste that is 90% pure silver. China's National Energy Administration plans to add 160 gigawatts of solar capacity in 2025 alone, prompting massive demand for silver paste. And then there's electric vehicles. EVs require 67 to 79% more silver than traditional internal combustion vehicles. The shift from combustion to electric is expected to boost silver demand significantly, with approximately 25 to 50 grams of silver per EV. And if next-generation solid-state battery designs go into mass production, some estimates put silver loading at up to 1 kilogram per vehicle. Global silver installations reached around 655 gigawatts in 2025, while electronics and electrical applications, semiconductors, power electronics, smart grids, EV components, AI hardware, and data centers form the backbone of silver consumption. China isn't stockpiling silver because it fears the apocalypse. China is stockpiling silver because it understands the industrial future better than anyone. They are building the machines that need this metal. They are the factory floor of the energy transition. And they are making sure they never ever run out of the raw material that keeps that factory running. Now here's where the story gets really good, or really bad, depending on which side of this trade you're on. In 2025, global silver demand reached an estimated 1.24 billion ounces, while total supply, including mine production and recycling, only amounted to about 1.01 billion ounces. That's a deficit of over 230 million ounces, equivalent to the entire annual output of Mexico, the world's largest silver producer. Let that number echo for a moment. We consumed roughly 230 million more ounces than we produced in a single year. And this wasn't a one-off. Since 2021, the global silver market has run in deficit for 5 consecutive years. Industry estimates suggest cumulative shortfalls of roughly 820 million ounces between 2021 and 2025, nearly equivalent to a full year of mine production. We have been drawing down the world's silver stockpiles for half a decade. And the market barely noticed until 2025. Silver's price action in 2025 was historic. The metal surged 138%, its strongest annual gain since the 1979 Hunt Brothers squeeze, with prices peaking at USD 83.60 per ounce in December before retracing. Silver reached its all-time high of 121.64 on January 29, 2026. Triple digits, a level that analysts had been calling impossible just 18 months prior. And right now, as I'm recording this, silver is trading near $82 per ounce, recovering losses as disappointing U.S. economic data and deteriorating confidence in U.S. assets boost safe haven demand. Even after a massive correction from January's all-time high, the metal is still trading at levels that would have seemed absurd just 2 years ago. Why can't supply keep up? Simple. Silver mining expansions have lead times between 5 and 8 years, and 72% of silver mining occurs as a byproduct alongside other minerals. Only 28% of silver mining is directly responsive to the silver price. You can't just turn on the tap. The mines aren't there, and by the time they get built, the deficit will have deepened further. Now we get to the move that should absolutely have your attention. Because China didn't just buy silver. China moved to control silver. Starting January 1st, 2026, China implemented new export restrictions on refined silver. Under the new policy, only large, state-approved companies are allowed to export silver, and only after obtaining special government licenses. To qualify, firms must meet 2 stringent conditions: an annual production capacity of at least 80 tons of silver. These requirements effectively block hundreds of smaller and mid-sized exporters who have long served as key suppliers to global industrial users and refineries. China currently controls between 60% and 70% of the world's refined silver supply. Even a partial restriction instantly creates global supply shock. Think about what this is. This is the rare earth playbook, but with a metal that is even harder to replace. China did this with rare earths in 2010, and the world scrambled. Now they're doing it with silver, a metal that sits inside every solar panel, every EV, every semiconductor, every piece of AI infrastructure. The export controls are part of a broader geopolitical rivalry between China and the West, where control over critical minerals has become a central battleground. If China reduces exports by 50%, global deficits could exceed 5,000 metric tons annually, compounding existing shortfalls. This scarcity will disproportionately affect industries with rigid demand profiles, such as renewable energy and electronics, where substitution is either impossible or prohibitively expensive. This is leverage, cold, calculated, resource-based leverage, and the West walked right into it. The United States imports over 70% of its silver consumption, with significant refining capacity concentrated in China. The U.S. Geological Survey proposed classifying silver as a critical mineral for the first time in 2025, scrambling to catch up to a reality that Beijing recognized years ago. Here's the part that makes this more than just a commodity story. Here's where it gets genuinely important. A central question in the de-dollarization push is, how do you settle international trade without using the dollar? Gold is an obvious candidate, but it is very expensive. Not every country can realistically settle large volumes of trade in gold. Silver, however, is much cheaper per unit and simultaneously has real industrial demand, meaning it cannot be fully virtualized or replaced by pure digital tokens. Silver, in other words, has a dual role that gold simply cannot replicate. It is a monetary metal and an industrial metal. It is a store of value and a factory input. You cannot print it, you cannot manufacture it without a mine. And right now, China sits at the center of the global silver web. As the world's largest consumer, one of its largest producers, and now as the gatekeeper of refined silver exports. China's estimated gold position combined with substantial silver stockpiles enables fixed exchange rate experimentation during dollar system instability. The strategy prepares for potential currency crisis scenarios where physical backing becomes essential for international credibility. This isn't paranoia, this is strategy. The same kind of patient, long-horizon strategy that built China's dominance in rare earths and solar panels and electric vehicles. While Western politicians debated quarterly earnings, China was playing a decades-long game for control of the materials that power the future, and silver just became their newest piece on the board. Let me give you the honest picture, not the permabull version. The real one. The structural story for silver has never been stronger. Industrial silver demand reached a record high of 680.5 million ounces in 2024, marking an 11% increase from the previous year. The silver market is forecast to remain in a deficit for the 5th consecutive year in 2025, with a projected shortfall of 149 million ounces. Analysts at the Devier Group project that silver could reach $200 per troy ounce by the end of 2026, citing structural demand, supply shortages, and ongoing uncertainty as key catalysts. Other major banks, including UBS and Bank of America, have raised their silver forecasts, pointing to sustained ETF inflows and industrial demand. Even the more conservative consensus clusters well above pre-2025 price levels, but volatility is real. The white metal remains down about 33% from its all-time high reached on January 29th, right before a sell-off that wiped out nearly 50% of its value in just weeks. This is not a metal for the faint of heart. If you can't watch your portfolio drop 40% in a month and hold steady, silver is going to eat you alive. The long-term story, however, is what China already understands. Silver has moved far beyond its traditional role and is now a strategic metal, shaping the global energy transition, AI infrastructure, and digital industries. Demand is rising everywhere, but supply remains structurally constrained. Mines cannot ramp up fast enough, or grades are falling, and China's export controls are tightening global flows. We are in the early innings of a repricing that reflects silver's true strategic value, not its historical role as gold's poor cousin. Here's my bottom line, and I'm not going to hedge this into uselessness. China is not buying silver because their analysts stumbled onto a hot trade. They are buying silver because they have a 30-year roadmap, and silver is on it. They see the solar expansion. They see the EV revolution. They see the AI build-out. And they see a world where refined silver flows through Beijing before it reaches anyone else. They designed that world, deliberately. The question is not whether silver matters. It is baked into the physics of every clean energy technology we are betting civilization on. The question is whether you will understand the opportunity before it's gone, or whether you'll be reading about it 3 years from now, wondering why you didn't pay attention when the data was sitting right in front of you. Don't be caught sleeping. Do your research. Size appropriately. And if you learned something today, hit that like button, share this with someone who needs to hear it, and subscribe, because there is a lot more of this kind of deep dive analysis coming. This is not investment advice, but it is information. And information used wisely is the only edge that ever mattered. See you in the next one.